Ladies and gentlemen, good day and welcome to Q1FY27 earnings conference call for Sigachi Industries Ltd. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star, then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Riddhi Shah from Go India Advisors. Thank you, and over to you, ma'am.
Thank you. Good afternoon, everyone. It's my pleasure to welcome you on behalf of Sigachi Industries Ltd. Thank you for joining us today for Q1 FY27 earnings call. We have on the call Mr. Amit Raj Sinha, Managing Director and Chief Executive Officer, Mr. O.S. Reddy, Chief Financial Officer, and Mr. Vivek Kumar, Company Secretary and Compliance Officer. Please note that today's discussion may include certain forward-looking statements and must therefore be viewed in conjunction with the risks that the company faces. I will now like to hand it over to the management for opening remarks. Thank you, and over to you, sir.
Thank you, Riddhi. Good afternoon, everyone, and welcome to Q1 FY27 earnings conference call of Sigachi Industries Ltd. The financial results and investor presentations have been uploaded on the stock exchanges. I hope everyone has had an opportunity to review them. We enter FY27 with a clear focus: execution, innovation, and creating sustainable value. Q1 reflects our continued commitment to strengthening our core business while advancing the strategic initiatives that will support Sigachi's long-term growth ambitions. Operations remain stable throughout the quarter with healthy customer engagement across key geographies. Our cellulose-based excipient capacity stands at 18,000 metric ton per annum, with export accounting for over 53.5% of the production. The 12,000 metric ton per annum MCC capacity expansion at the Dahej 2 continues to progress on schedule, and upon commissioning, which is targeted by Q2 of FY28, will take our total cellulose-based excipient capacity to 30,000 metric ton per annum. In parallel, our 1,800 ton cross-Carmelos sodium facility at Dahej SEZ continues to advance, supporting our overall move of higher value excipient categories and a stronger overall product mix. On the innovation front, during the quarter, we launched High-Cell SMCC Nutra, a unique combination of microcrystalline cellulose and magnesium aluminometasilicate, purpose-built to address flowability, compressibility, and processing challenges in the nutraceutical formulations. This launch reinforces our strategy of moving up the value chain with differentiated application-specific excipients and extends our platform further into the food and nutrition space. Our API business also continues to evolve and continues to support our CEP filing pipeline as we build towards a regulated market expansion. Our O&M verticals remain a steady, scalable contributor aligned with our long-term growth priorities. We also continue to strengthen governance, safety, and ESG practices across our manufacturing facilities through online processes, improvements, capability building, and compliance-focused initiatives. As we look ahead through FY27, our priorities remain centered on disciplined execution of our expansion project, strengthening our product portfolio, and improving profitability through consistent operating performance. To our employees, customers, partners, lenders, and shareholders, thank you for your continued trust and support. We remain committed to delivering on that trust through consistent execution in the quarters ahead. With that, I now invite our CFO, Mr. O.S. Reddy, to take you through the financials and operational highlights of Q1 FY27. Thank you.
Thank you, sir, and good afternoon, everyone. During Q1 FY27, Sigachi reported total operating income of INR 121.27 crores. EBITDA for the quarter stood at INR 16.5 crores with a margin of 13.6%. Net profit came in at INR 8.14 crores, translating to a PAT margin of 6.76%. The MCC segment contributed INR 82.74 crores, while the O&M and API segments recorded revenues of INR 13.06 crores and INR 21.68 crores respectively. That concludes my update. We can now open the floor for questions. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Rahil Dasani from MAPL. Please proceed.
Yeah, hi, I'm audible.
Yes, sir.
Rahul.
Yeah, good afternoon, and first of all, thank you for this opportunity. First of all, I would like to understand what's the demand and pricing scenario in MCC right now. It seems that majority of the Indian players are expanding their capacities. How worried are we about an oversupply situation arising whereby prices may drop a lot? If you can just help me out there.
Rahil, on this point, I would like to say, see, it's not always the capacity which makes a difference. It is also in terms of your regulatory compliance and the quality in terms of getting an approval from the regulated customer, which actually is relevant in terms of, capturing the export markets. I agree that there are a reasonable number of players who are adding in capacities, but historically we have seen that the Asia Pacific region has had a CAGR growth of 7 to 8%, and there are reports which indicate that up to 2025 this will continue to grow at a reasonable pace. I believe by 2035 the market is expected to touch a size of $1.4 billion.
Okay. Maybe if you can give me a bit more specific around the pricing as to how is it faring since the last 4 to 3 to 4 quarters. What sort of changes have we seen in the realizations in MCC?
Yeah, Rahul. Here Q1 there is an average realization of 241.36 rupees per kg, and previously it was 216. There is a good increase here.
When you say previously, you mean when?
Previous quarter, Q4.
Previous quarter. Okay, so you're saying quarter on quarter we have seen such a large increase.
Even from the beginning, there is a good increase is there quarter on quarter or continuously.
Okay. And so why is this happening? What is suddenly changing in this segment so much? Because MCC is not a very high complexity product. So what is changing right now that is leading to so much demand and so much realization increase? What's going on there? Is there like some global plants have shut down or something else?
No, it's not like that. See, here MCC, there are people think that there are no entry barriers at all. Anybody can come and play, but here there is vintage also takes place, and the expertise, even the other players, even I can quote here, Arvindo sometime back, they have opened crushed cellulose and they have incurred losses, and then they sold their unit to Concall. But see, people, they'll see this product will be used in API. Mostly in formulations, this will be used. API cost will be on higher side always when we compare to MCC. Very far high. If they take this substandard or even unregulated or even those who is not proven in terms of their quality and customer satisfaction, if they use, they may incur huge losses, or their damage will be on higher side. That is the reason they don't prefer, because Sigachi is known for quality and customer satisfaction. That is the reason we have good product demand is there.
Got it. And just one last question on the MCC before I go to CCS. It seems that we have lost some market share to some of our local peers. What's the strategy to get them back, and why should the customers come back to us again? Or will the strategy be to, since there is so much demand, we just capture demand from new customers and that's how we do it?
No. In fact, we have lost market share primarily because, we have had a shortfall in our capacity.
Yes.
There has been a reduction in our capacity by about 6,000 metric ton per annum, and because of that, we have not been able to supply to our customers. So naturally, our customers, wherein they have approved, the other players will move to the other place because they can't stop their production. So we are quite hopeful that, for the kind of relationships which we have cemented over the last 3 decades, once the capacities come back on track, we will be able to regain our, the bigger share of our customers' wallet.
Got it. And now coming on to CCS, what sort of market and demand are we seeing for CCS?
Sorry to interrupt, Mr. Dasani, but can you please rejoin the queue for follow-up?
Sure.
Thank you. The next question is from the line of Rupesh Tatya from Long Equity Partners. Please proceed.
Hello, sir. Thank you for the opportunity and congratulations on maintaining, the margins and good results from Q4 to Q1. It's good to see the turnaround. So first question, I think, is in the Q4 call, you said API revenue can go to 90 to 100 crore. I think in this quarter it was around 18 crores. So how do you see the ramp up through the quarter? Is there some seasonality? When can we hit, 25-30 crore quarterly run rate in the API business?
Yeah. This quarter, we have done 21 crores, and in the second and third subsequent quarters, we do good, and then we achieve, we hope we'll achieve our budget or targets.
So are there any products driving this?
Yeah, there are some new molecules are there. Even we are some molecules, even sparsentan and gestapine and bempedoic acid. There are other molecules where we can get higher margins also, and good business also is there. Definitely, our revenues will go up, and also margins also are going up.
Okay. The second question, sir, is I think we've given revenue guidance sort of 650 to 675 crores. So we need to hit the 160 crore sort of quarterly run rate, 160 to 170 crore. So, and I think in this quarter we came up fairly short, 120 crores. So were there any issues that you faced in this quarter? And is there some change in the guidance, or we will see significant ramp up starting Q2?
Second off onwards, these revenues will go up. It is as planned. That is there in Q1 also. Only small variations are there, but otherwise we are on track.
So there is no change in the guidance, huh?
Yeah.
650 to 675 crore, there is no change in the guidance.
Yes. There is no change.
Okay. And then how about margins, sir? Margins also, I think it's now 13% in Q4, now 13% more. So we'll still feel like we'll hit 18% for the full year?
Yes. As planned, we are on more or less on track only.
So what would be some drivers, sir, for margins to go from 18%, 13% to in some quarters you will have to hit 20-21% margins. So are there some one-off expenses or gross margins will improve or some operating leverage play out? Can you give some drivers that will make sure that the margin goes to 18 to 20%?
Yes. The fixed costs remain constant, and we are expecting our revenues will go up, and indirect costs will remain as is. That is the reason margins also will go up. Once the revenue increases, the fixed costs, there is no change, and margins we are expected to. Anyway, that is natural phenomenon that revenues will go up, and we are expecting quarter-on-quarter improvement is there in terms of revenues also.
Okay. And sir, what were
Sorry to interrupt you, Mr. Rupesh, but can you please rejoin the queue?
Yeah, sure.
Thank you. A request to all participants, please restrict your questions to 3 questions per participant. For more questions, please rejoin the queue. The next question is from the line of Ankit Gupta from Bamboo Capital. Please proceed.
Yeah, thanks for the opportunity. Sir, on the MCC side, if you can talk about the demand from smokeless tobacco snuff, which is known as, we have been reading that, snuff is almost has 60 to 70% NCC. So how is the demand from that segment? Are we catering to this segment, and how do you see growth from this segment for us and as well as the industry?
Thank you, Ankit, for this question. Ankit, the smokeless tobacco industry is at a very nascent stage. So, forming up a schedule of a demand and the possibility of growth in that segment is still very nascent. I wouldn't really be able to speak up and, give you a commitment on what is it that we look forward for probably the next 3-4 quarters or maybe the next a couple of years. But what I see is that in the tobacco industry, there is a reasonable shift from the typical traditional tobacco, the smoking tobacco to the smokeless tobacco, and for that the formulation entitles that there is a need for cellulose MCC in that. So there is a reasonable demand moving up in that direction, but it will be difficult to give you a future guidance on that.
Are we supplying to them to the industry, and how much sales contribution does it have to our overall MCC's segment?
I think it will be a tricky thing to give because we supply to many formulations. Likewise, we don't really have the upfront data on how much is the quantity we supply for the tobacco industry from our distributors. Or just about all of it is exported out. There is none of it in India. So and the export is primarily through the distributors. And from the distributor side, they cater to different formulations based on, supply-demand gaps and requirements. So it will be difficult, but I could tell you that it is a reasonable bit.
Okay. Because what we read is that, this industry itself is growing at 40-50%.
Yeah, I believe that gradually the smokeless tobacco industry would taper down and would have a steady growth. 30-40% I think is actually unrealistic to maintain.
Sure. And sir, the second question was on the CCS side. So here we will not be making the key raw material for this, which is CMC, and we will be procuring that from China. So, how much cost advantage does CMC provide? If one is what kind of margins do we see in CCS segment if we procure CMC from, let's say, I think China is the biggest supplier there. So
absolutely.
So if you can share your views on that.
So I would say that if there is somebody who's making a product at a better price, at a better cost, and you're able to kind of get it at a good price, you should probably be just buying it from them rather than trying to integrate yourself all the way up to the KSM. So China, of course, has got lakhs and lakhs of tons capacity of CMC in place. So I think it would be futile to just add up additional CMC capacities in-house, wherein I will probably have only a couple of thousand tons of CMC to be made, wherein my cost will be far more than what I buy from China. So it is business sense at this moment to just procure it from a big player of CMC.
Sure. And sir, if you can talk about how this market is shaping up on the CCS side, what we understand is it's largely been, dominated by the large, excipient manufacturers like Rockets and other players. So how, if you can talk more about what are the realizations here, what kind of margins are we targeting here, and how do you see the growth in the segment?
Yes. So because we are already entrenched in the supply chain, we are already there in the pharmaceutical excipient supply chain. So the way microcrystalline cellulose is, wherein it's a binder, the CCS becomes a disintegrant. So and both of these functionalities are essential for tablet making, so that makes it easier. Now, when my customer is already taking in MCC and he is taking in the other product, other complementary excipient products from the other players, they'll be more than happy to look at us as Sigachi as an established Indian player to explore additional excipients. So that is how the whole supply chain will pan out. And over and above that, in terms of margins, it is far more healthier than what the MCC margin is. So that gives us strength because the chemistry here is much more complicated than the cellulose chemistry of MCC.
Sure. So can we assume margins here can be in the range of 25% plus, even if we import CMC from China?
Absolutely, Ankit, you're right.
Okay. And sir, how will we compete with,
Sorry to interrupt you, Mr. Gupta,
Sure,
but can you please rejoin the queue? Thank you. The next question is from the line of Nalin Shah from NVS Brokerage. Please proceed.
Good afternoon. Let me offer my congratulations to the management that after such a big disaster, you have come back and started the normal operations. So we are very happy to see the company coming back. I have a very broad question.
All your blessings and the goodwill of all our customers.
Always there.
Thank you, sir.
Thank you. Now, my question is a very broad question that somewhere, during this period you had said that now, since you will be coming back to normalcy and, starting it, then you are planning that, this somewhere around 650, 700 crores top line and about some 85 to 100 crores bottom line. My first question is whether are we somewhere near that and we would be able to achieve that? That is I think the this disaster, this is the numbers which we were there. So whether you will be able to reach that level in the current year or maybe next year. That is some light you can throw on that. And my second question is that have we been compensated in terms of, loss of property, etc. by the insurance cover? Then what is the, amount we have either received or we are in the process of receiving it or something which will help us in understanding our working matters.
Yeah, thank you, Alisha. Your first question, we have given the last earnings call, the guidance is 650 to 675. More or less, we are on the track, and we hope we'll achieve the track. And coming quarters, quarter on quarter, there would be improvement would be there, and in revenues also will go up. And as the fixed assets remain constant, the margins also goes up. We are on track more or less. And coming to your second question regarding.
So shall we achieve the pre-disaster level, whatever the best performance you had this thing posted, current year should we reach that?
Yes, sir. That's what is the guidance we have given. Now we are on track. As expected, the first quarter would be these levels, and next quarter, and then we have planned quarter-wise. We are on track. And coming to your next question relating to the insurance. The assessment is done, and that is they have sent it for the insurance company, and this derbies and all the e-auction they have done. And that is in process. It is expected some few reports they have asked further, and those reports also will be submitted in this week. And there is an indication that in this quarter, maybe before end of the September, we'll receive either the full claim with some discount or some ad hoc amount. That's what the recent estimate and the information given by the company.
Okay. Congratulations to you, and I think best of luck for the new innings now.
Yeah, thank you, sir.
Thank you. The next question is from the line of Amit Vora from Ginar Consultancy. Please proceed.
Good afternoon, gentlemen, and thanks for the opportunity. A few of my questions have been answered. I'll keep it brief. The first thing is that what has been the utilization for this quarter?
This quarter utilization at overall for all the company level 76.8% is there. At Dahej unit 76.5% and Jagadia it is 77.16%, and on an average 76.8% is there. In next quarter it will go up. Quarter on quarter it will go up, and also at the same time we are planning to increase capacities by debottlenecking. That is the thing.
All right. So we are already almost half the quarter of Q2 is also done, so you will have a fair idea on how things are, and that shows in your body language also that pretty confident on achieving the full year number that you had guided in Q4. So we are definitely looking forward for that number to be reported. The second question is, sir, considering the fact that we had a big loss which is there in our P&L, so why do we have this tax liability, sir? Just wanted to understand.
That is MAT is there, sir, minimum alternate tax. Based on that,
Okay.
It has come after setting up also. But this loss that can be set off against future years. But the minimum
Right.
MAT.
Two more questions and I'll join back in the queue, sir. One is promoter had told about buying from the open market. So whenever the time is there or whatever it is, I hope that commitment stays.
Promoter, we have never said that we'll buy in the open market. Never.
So this forfeit has happened, sir, of the warrants. So my mistake, sir. Apologies for that. The forfeit of the warrants has happened. So is there any way that the promoter is looking forward to, buy anything from the open market, considering, where we are and what we are going to achieve? Just a question if that can be answered.
If anything is there, we'll make an announcement, sir.
Sir, one last feedback, sir. You are giving your results and there is very less time to analyze, sir, between the result and the conference call. I am new to the company, that's why I'm not aware if this has been the trend. Sir, if you can change this a bit, it gives us some understanding on what questions we can ask and we will be better prepared, sir.
Yeah, sure.
Because it was just 10 minutes, sir, for the call to start and the presentation was given. So in the presentation, there is an agenda item saying guidance, but I did not see anywhere about the guidance mentioned. So when we are talking in the call, you are mentioning. So just a feedback, sir, if you can just be a bit.
Yeah, only thing is, as per the statutory requirement, all the meetings, we should have even NRC committee, audit committee meeting would be there, and also the followed by board meeting, and at length that will be discussed. That is the reason. After conclusion of the board meeting only, we can make this report, and then we can give it immediately. That is
yes, sir. So give some time, sir. At least give 1 more hour, sir, between the your board meeting ending and the conference call, sir. Anyways, it is at 4:30. We can keep it at 5:30. It will not change anything. Just gives us a better time to analyze the things, sir. That's it.
Yes. Okay, we'll see.
Yeah. Thank you and all the very best, sir. I'll get back in the queue if any questions.
Thank you.
Thank you. The next question is from the line of Deepak Chokhani from Rate Capital. Please proceed.
Yeah, hi. So sorry, I missed the answer on insurance. By when are you expecting that, sir? Did you say December?
No, September, sir. September, as for the recent information, in September, either the full claim with some discount or some ad hoc amount would be given.
And are we planning any capital raise in the near future, given the capex which is coming? And so yeah, sorry.
That yes, sir. Those at appropriate time. Once that is finalized, then we'll come with an announcement, sir.
Okay. And my last question is, I think last time you mentioned that the Dahej plant expansion will happen by Q4 of this financial year. And in the opening remarks, I think I heard Q2 of next fiscal. Is that correct?
Yes. Last earnings call, we said that Q1 of FY28, but
okay.
It is likely to slightly, it is in the wedge at the end of Q1 or beginning of Q2. That's why our project people, they said they have confirmed that Q2. That is the reason we have mentioned Q2 FY28.
Okay. So do you anticipate any further delay beyond that?
Yeah, as of now, in the recent meeting, that is the expectation. Mostly, we'll complete by that time in Q2,
Okay.
Q2 FY28.
And I believe there's 100 crore further capex to be done approx. You can correct me on that. How do you see that funding to come from?
Either from bank finance or even this. Anyway, we are just discussing even preferential issue or just we are thinking once that is concluded, then we'll come up with an announcement.
Perfect. Thank you, sir. All the best.
Thank you.
Thank you. The next question is from the line of Darshil Javeri from Crown Capital. Please proceed.
Hello. Good evening, sir. Thank you so much for taking my question. Firstly, congratulations on a great set of results, sir. So I just wanted to note our margin trajectory. So when we say that, I think last year we said around 18 to 20%, margin. So right now, if you've done 13, even if our revenue ramp up, will by Q3, Q4, will we reach 18% is what we saying? Are we saying that exit run rate will be 18% or full year consolidated can be 18%, sir?
Full year consolidation, we have expected that is 18%.
That would mean that our Q4 or H2 should be a bit higher than 20% because that's how we'll reconcile that, right? That's why I was a bit skeptical on that part, sir.
Yeah, once the revenues goes up, then that is possible, and we are expecting, we are on track. As projected in Q1, we have expected this much revenue and EBITDA margin. And next coming quarters, it will go up. More or less, we are on track, and we hope we'll achieve this.
Okay, that's really great to hear, sir. And so just wanted to know in terms of like our capex. So could you just say what is the capex you're going to do in FY27 and 28, and how much of it is yet to be spent like this?
Yeah, FY27 around more than 100 crores we are going to incur, and FY28 also it would be another 150-200 crores would be there.
Okay, 150 to 100 crores will be there. And so for this, we are going to be relying on internal accruals and borrowings, or are we, planning some, fundraise in case?
Yeah, that's what even now we can borrow, and as well as we can raise some preferential equity. That will come up with an announcement once that is finalized.
Okay, fair enough, sir. Yeah, that's it from my side. Thank you.
Okay, sir. Thank you.
Thank you. The next question is from the line of Ankur, an individual investor. Please proceed.
Good evening, sir. Mostly all my questions have already been answered. One thing I'm still not sure, is there any new capacity or something new that we are going to make in the coming 9 months? Because I'm still not sure how can we achieve the target that has been set by you about 650 crores revenue. In case our 75% utilization is already there, is this still workable? Because if in case 75% capacity is utilized and we are doing a revenue of 120 crores, so how does the math work out, sir, for 650 crores?
Yes, sir. Thank you, Ankur. This balance utilization also, capacity utilization also will happen, and also we are increasing the capacities by debottlenecking, adding one shifter or some blender or small equipments we'll add, and then we'll increase the capacities. We'll find out the ideal time, and then we reduce the gap so that we can increase the production. That is one thing. And also we are expecting a better change in mix of the products. Even co-processed where we'll get higher margins. There we are concentrating, and we'll get more sales of that kind which gives higher margins. With that, this thing we can increase revenue as well as margins. Even our API business also, we are going into the high margin products. That is the reason we have expected that 650 to 675 crores of revenue and also the 18% of EBITDA. We hope we'll achieve.
Okay. And sir, I understand that this insurance amount, it takes time because the unfortunate incident that took place, I'm sure that the company has a lot of regulations that they have to go through before they disburse the amount. But if in case it still prolongs further, let's say you're expecting it in September, and let's say it takes more time. So will our capex that we are proposing to do of 250 crores, will that be hampered if in case the amount gets delayed, sir?
We have various options are available, sir. We can raise funds. Term loan we can take. As of now, the company is debt-free. We don't have any term loan. And term loan we can take, and also we can raise preferential equity or even preferential warrants. This kind of this thing. We'll come with, we'll finalize, and then we'll come up with an announcement.
Sir, my only issue with preferential is that last time when we did the preferential share, some of the promoters' shares were forfeited because the amount was not deposited in time. So that is my only concern here, because preferential shares would require again the same process to take place, and again the promoters or non-promoters to deposit the money in time. That is the only concern.
In that case, even many bankers are ready to provide us. As of now, we don't have term loan, and they are ready to fund us. Even last time, that is some misplanning took place in the last moment because of unexpected holidays, and hope every time it will happen with the same thing. Of course, we have not finalized any option, but once we finalize, then we'll come up with an announcement.
Okay, sir. Thanks a lot for answering my questions, and all the best, as the other person said, for the second innings, sir. We really hope that the turnaround comes soon, sir.
Yes, sir. Thank you.
Thank you. The next question is from the line of Gautam Karwa, an individual investor. Please proceed.
नमस्ते सर, कैसे हैं आप? एक तो क्वेश्चन ये था कि इंश्योरेंस क्लेम का काफी डिले हो रहा है, इसकी वजह से शायद आपको केस की और कुछ प्रॉब्लम्स आ रही होगी, तो कब तक आप उम्मीद कर रहे हैं कि इंश्योरेंस अपना पास हो जाएगा और पार्ट में आएगा, या क्या अमाउंट आप उम्मीद कर रहे हैं?
Thank you, Karwa sir. This insurance, since it is a claim is on higher side, they are taking a lot of time, and there is delays being happened. And this saying, as for the latest information, now the assessment they have completed, and there is also the e-auction took place. And as for the latest information, we expect that the claim will be settled in full by September, or at least HADAC amount will be received by September.
Sir, दूसरा क्वेश्चन,
if claim is settled, some discount would be there. That is the indication. With some discount that would be settled.
दूसरा क्वेश्चन सर ये है कि आपकी मार्च 26 Q4 प्लस अभी की जो सेल्स है वो लगभग सिमिलर आई है, लेकिन अदर साइड ये देखते हैं कॉस्ट ऑफ मटेरियल, परचेज इन ऑफ स्टॉक और चेंजिंग इन इन्वेंट्री, उसके हिसाब से इस क्वार्टर में आपका यूजेज जो है स्टॉक का मटेरियल का वो कम हुआ है, तो ऐसी क्या चीज हुई है, एफिशिएंसी बढ़ी है या क्या हुआ है ऐसा कि आपका रॉ मटेरियल का कंजप्शन कम हुआ है या स्टॉक कम हुआ है?
Yes. Efficiency improved, and consumption is on lower side. Margins also, it leads for margins. It depends upon sales mix also, and there is a slight variation, not very high. Slight variation is there, but that is because of that is a positive, and we expect that positive consumption in coming quarters also.
तो सर यही सेल रही तो अपना 650 करोड़ का या 675 करोड़ का जो आप टारगेट है वो तो अचीव होना भारी हो जाएगा.
Yes. We hope we are on the track, and we'll achieve as projected. Our turnover will be in these levels only in Q1, and quarter on quarter the turnovers revenues will go up, and margins also expected to increase.
Thank you.
Thank you.
Thank you. The next question is from the line of George from Equity Intelligence. Please proceed.
Hi, good evening, sir. I wanted to understand your API business a little bit more. Could you explain your top 3 molecules and whether you have added any new molecules in the current year versus the last? And also, if you could share an update on your cystic fibrosis product, when can we expect the revenues to start flowing?
Yes, sir. This API, we have new molecules like sparsentan and bempedoic acid is there, and which gives the higher margins. And this quarter, we achieved around 21 crores of top line, and next quarter, coming quarters, quarter on quarter, there will be improvement, and we are expected to achieve more than 100 crores, 100 to 110, around 110 crores. or even more than that also. But as of now, easily we can achieve.
Okay. So was there some inventory restocking issue in bempedoic acid? Because I was listening to some other companies with a similar product. Is that issue still there, or what is the outlook?
No, not there. These are the new molecules, and there would not be any inventory stocking. We produce and sell. There is no need to hold it also, based on
Okay. And on your cystic fibrosis product?
that is there, but even before that, this product itself will fill the capacities, and that is also there. We are expecting maybe next year the revenues are at the end of the year. There are inquiries, orders are coming, but we are busy with these current products, and next quarter we'll get more clarity on that.
Okay. Thank you, sir.
Thank you, sir.
Thank you. The next question is from the line of Rahil Desani from MAPL. Please proceed.
Yeah, thanks for the opportunity again. 3 questions from my side. First question is, how big is the CCS market in India and globally? If you can maybe share it in value and tonnage terms. Secondly, this being a new first-time product for us, how quick will the utilization of this product be, as customers would maybe need to verify and approve our products and setup? That's my first question.
Yeah, Rahil, the CCS market in India is estimated at about $100 million.
Okay.
There is, I would put it, the average realization is in the range of 1,200 to 1,500 on certain occasions, and certain specific grade it also touches more than that. So you could make out as to what is the kind of tonnage we have. In terms of customer changing their suppliers for this, of course there is a specific pharmaceutical system that is followed, wherein people formulate it and then put it under stability. But because we are already in a close connection with our pharmaceutical customers and are part of their supply chain and as a approved vendor, I believe we will be able to accelerate it and take customers on our side.
Got it. Very clear. My second question is, are we going to use cotton pulp or wood pulp to make this CCS, and how do realizations and margins vary in both of them? If you can maybe give me an idea.
So we wouldn't be using cotton pulp or wood pulp because one of the input materials which is at a certain stage of the process is carboxymethyl cellulose.
No, and so I'm saying cotton or wood pulp based CMC. That's what I'm saying.
Okay, so you're telling me no, but that is dependent on my supplier. I would want a certain specification of CMC, and that is what I will give it to my supplier. He has to make it an alignment with that specification. So that is his lookout.
Okay, got it. Just one last question coming on to back on the MCC side. Is the demand in MCC, like you established that the realizations are increasing, is the demand in MCC high enough that as and when our capacity comes, that is maybe Q2 of FY28, our utilization can be very quick and we can scale up that facilities very fast, since we already have our older customers? Yeah, if you can share on this.
Yes, Rahil, we believe that we can scale up the capacity utilization of the proposed new facility much faster. Primarily because we have been in the supply chain for the last 30 years, selling across 65 countries, selling the same product, established supply chain. So I don't believe that there is a challenge in that. So scaling up is not really an issue.
Got it. And just to confirm the CCS pricing, you said you will be pricing your product at 1,200 to 1,500. From what I had understood, the MNCs sell at that prices and the local players are selling it in triple digits maybe.
So I think it's a matter of supply chain, regulatory, customer willingness to pay, and so many more things. There is always a range, but we will of course work to see that we price it at the best point wherein customer is willing to pay us.
Fair enough. Got it. Thank you very much, sir. That would be all. Thank you.
Thank you, Rahil.
Thank you. The next question is from the line of Rupesh Tatia from Long Equity Partners. Please proceed.
Yeah, thank you. Thank you for the follow-up, sir. First, picking up on the MCC. So if I do 82 crore divided by 241, which was the realization, the volume comes to around 3,400 metric tons, which is basically 25% capacity utilization. Given that we are going to 30,000 in like 3-4 quarters, I thought capacity will be running at full. It will be running at 95%, maybe even above 100% with some trading quantity and all that. So this 75% capacity utilization with such a large expansion, I'm not able to reconcile actually. So could you please help with that?
We actually didn't understand your question, Rupesh. If you could just, maybe just come up again as to what is it that you're looking at?
So, sir, we're going from 18,000 to 30,000. I was thinking that we would already be selling, 17, 18,000, 16,000 maybe. Already we will be selling, and the demand is so strong that maybe we are even buying some trading quantity and selling. But our capacity utilization is just 75%, and we're doing such big capex.
That's right, Rupesh. So in FY25, we have sold nearly 20,000 tons. We have sold 20,000 tons, so we had a reasonable chunk of market, and our capacity at that moment, I think, was around 24,000 tons. And unfortunately, thereafter, we had an incident at our Hyderabad facility where we lost 6,000 tons of capacity. And that is how we are kind of, limping back to the best capacity of what is possible in our other two facilities for this product. And that is another reason that we believe that when we add in double the capacity of what we have lost, we will be able to gain back markets.
But I mean, why? Because your previous, you are already selling 20,000, and if I annualize the current Q1 number, it is around 14,000. So why are we not at full 18,000 capacity utilization? I mean, are we not able to win back the market share, or is there some, supply side issue?
So there is neither a supply side issue nor a market share issue. It is that, the plant doesn't turn around so quickly. I wish it was like, speeding up on a highway. It's not so easy, for turning around. Every time you move in, there is an increase. There is a possibility that the product mix changes. With the product mix, there is a shutdown, there is a start over, there is a cleaning validation which is required to be done. There are so many things which go in. And when we have a product mix, sometimes the product adds up more value because their average realizations are sometimes, touching 600, 700. Same grade of MCC. So it's a lot of combination which goes into all these to balance out the capacity utilization, the realization, and eventually the margin.
Okay. So then at least Q4 exit, we should be at 4,500 quarterly run rate. That's a fair assumption to make.
Q4 exit should be at
4,500, 18,000 divided by 4.
Yeah. So 4,500 at this moment, 4,500 is the the declared capacity. We might probably be at 95% of that, but maybe 4,500. By the time I touch 4,500, my theoretical capacity would have touched probably 5,000. Because as a typical process plant, we keep debottlenecking to see as to where is it that the bottlenecking it and given some breather at that particular point. So, but definitely our run rate will be beyond 95-96% as we get closer to the year end.
Okay.
Thank you.
Sorry, just one more question is there. Hello?
Yes, please.
Yeah. So second question is, I think in the last call, I think the MCC capex number was given 106 crore and CCS number was 90 crore. So that is roughly 196 crore. And now you are saying 100 crore capex this year, 150 crore this year, so 250 crore. So there is a gap of 50 crore. So is there some additional product or something going on, or the cost of capex has gone up?
You are talking about next year. Next year, there is another, as you said, 106 is for MCC, 12,000 metric tons capacity, and this 93 crores is for CCS projects. And this year, we will be incurring around 100 crores. Already we have incurred some extent, some amount in previous quarter, previous year also. That is the reason. This year would be 100 crores would be incurring, and next year our project will be completed FY28 Q2 we have mentioned. In next year also some amount will be incurred so that we can complete these two projects. This MCC 106. Yes.
Yeah, sir. So my question is MCC plus CCS comes to 200 crore, and and you said 100 crore capex spend this year, 150 crore capex spend this year.
Yeah, there are other plans also are there. We'll come up.
So what is this 50 crore will be spent on? That is my question.
Further capacity expansions, further capacity expansion would be there.
In which area?
For other areas, and in this area also is there. In the MCC also we keep on for every 2 years, 2.5 years we have to increase the capacities to meet the customer demands.
Okay. I see. And then just one final.
We'll also come up with an announcement once that is finalized.
Okay. I see. Okay. And then just one final question is.
Sorry to interrupt you, Mr. Satya, but can you please rejoin the queue?
Yeah, sure.
Thank you. A request to all participants, please restrict your questions to 2 questions per participant. For more questions, please rejoin the queue. The next question is from the line of Dasu Goenka, an individual investor. Please proceed.
Hello.
Yeah, sir, please continue.
Yeah. Yes. Thank you so much for the time. Just want to understand. The first question is regards to the compensation of the victims. So have we transferred the entire amount? Is the entire amount being paid to them, or is there some lapses still going on?
Yeah, thank you, Mr. Dasu. This is so far we have paid 42 lakhs for each of the beneficiaries of the deceased. We have paid, and that is the matter is before court, and since we cannot comment anything more on that, but we hope there will not be any further liability. Let us see.
But the compensation allowance was 1 crore.
That it was announced by the state government, and that is there in the recent hearing also. The Honorable Judge has called all the Inspector of Factories and Workmen Compensation Act and PF, ESI, what is the compensation maximum payable as per the statute. It was asked, and however that is...
So, Mr. Goenka, this is sub judice at this moment, and it will be inappropriate to deliberate over it.
That's okay. So just want to understand that we have done our obligation, right? Sigachi Industries has done our obligation.
We have provided. We have provided in the books for the entire amount, and we have provided. We have paid our obligation, and anyway, we have to abide by the court of law.
Understood. Another question is in regards to the business continuity insurance of 25 crore, out of which 16.5 was being the amount to be received to the company. So, is that money also coming later in the September quarter itself?
Yes. That is not September. It will take another 3-4 months' time. 16.5 crores it is expected. We are eligible to get, even though the policy is for 25 crores, we are eligible for 16.5 crores. And
okay. And by when we are considering to get the CCS facility 100% operational?
CCS facility that is in FY28 only that will come into operational.
Okay. All right. Thank you so much. Thank you so much for your time. Thank you.
Thank you, Mr. Dasu.
Thank you. The next question is from the line of Darshan Zaveri from Crown Capital. Please proceed.
Hello. Thank you so much for letting me ask a question again. So just wanted to understand, I think our breakup of revenue this time nearly 70% of revenue is from MCC. So if this trend continues, right, So from 650 crores, we have to do roughly around 450 crores from MCC, right? And at our full capacity utilization of 18,000 also, with our realization, I don't think we are reaching that number. Could you help reconciling that? Like, how are we going to reach that in the next 3 quarters? Like, if you could break it up, because what is our average realization right now? And our utilization is not at 100%, right? Even Q4, we are saying 90%. So how will we reach the 650 crore figure if you could break up? API is 100 crores, assuming trade and operation management will be another 100 crores, but 450 crores have to come from MCC, which is beyond what our capacity is, or how could you just help me break it up, sir?
Yeah, right now the realization rate is 241 rupees is there. Our capacity right now it is around 19,000, 18,000 is there, and also another 1,600 it is being increased, and also further increase would be there. And as you said, API and O&M will contribute more, and also the MCC also full capacity utilization would be there in the coming quarters, so that the revenue we have already worked out, and then it is as per the track, and we hope we'll achieve the target.
But sir, even if it is, yeah.
Yes, 241 is there, and coming quarters, if the 100% utilization is there, and even further, we wanted to increase the capacities by debottlenecking the MCC capacities. That is the reason it will go up. Almost we'll achieve the expected target.
Okay, because I still, sir, even if 19,000
yeah, 19,000 and further. Yeah, right now 18,000 plus 1,600, 19,600. It is already available. Further, we are going to increase.
So 19,600 available for 3/4 of the year, so that's 14,700. If I do it into 241, that's also 350 crores, and we are not going to be at full capacity. That's the reason I just wanted to ask about that, sir.
Yeah, 19,600 multiplied by 241. If you take in the first quarter, 75% only is there. 19,600 into 241, it's coming around 472. In first quarter, there is a shortage is there. But API and O&M will contribute more than 200 or around 200 crores would be there. And more or less we are reaching.
Okay,
and there are allied rates also are there. Just if you add all these things, it is matching. You please recalculate. It's coming.
Okay, fair enough. Yeah, that's it from my side, sir. Thank you.
Thank you. The next question is from the line of Rahil Dasani from MAPL. Please proceed.
Yeah. Just two things. On the MCC side, are we seeing more growth from the export market or from the domestic market? Where are we seeing more traction right now?
In MCC, we usually do in export market only, but domestic also there is a good demand is there. Wherever margins are there, we are pushing, and then we don't want to lose the customers. That is also one of the reason, and mostly export only would be there.
Mostly export, okay. And for MCC, are we primarily targeting pharma applications or more of Nutra and other applications?
Mostly in export through distribution channel the sales happens, and from the distributor most of the things will go to formulators and also the food and different food supplements and Nutra also. Exactly where the end use would not be knowing much, but obviously the formulation percentage would be higher side, contribution would be higher side.
Got it. And same question for CCS, the facility that we are planning. Are we planning it more towards export or for the domestic market?
More towards exports only.
More towards exports. Okay. Got it. Thank you.
Now itself we are getting orders from the customers for the supply of CCS from export customers.
So you are saying without even the capacity, we have the orders and we are seeing inquiries.
They are asking us to, because the MCC customer he also requires CCS, because in the same application the binder and disintegrate both are required. They're asking inquiries are coming from the foreign customers, export customers. That is the reason we are expecting more towards export.
Got it. But any reason that even without the capacity, these customers are reaching out to us? Is there like there's a shortage in the market right now or something like that?
Yeah, our marketing people, they have indicated that we are in the process of setting up of CCS facility, and also the same customer requires CCS also along with MCC.
So, Rahil, I would just add in here, this is what is actually called as goodwill. Yeah.
Okay. Fair enough. Got it. Thank you.
Thank you.
Thank you. The next question is from the line of Rupesh Tatya from Long Equity Partners. Please proceed.
Thank you. Thank you for the opportunity one more time. So one question, sir, I have is a bit of longer term trend. So when I look at MCC players in, let's say, FY16, 2016, 17, 18, everybody was sort of making 12-13% margins, and then for a long time from 2019 to 2026 almost, the margins went to 20%. So what I want to understand is, I mean, what happened? What was the realization pre-2019, and did realization significantly move post-2019? Is that why the margins structurally for the whole industry went up, or something else happened? Some maybe industry consolidation happened. Some people in developed world, Europe, etc., the capacities were closed down and we were able to gain market share. So what happened?
It's a long answer. If you're comfortable, I think we will tell, because it's a combination of just about everything that you speak.
So maybe you can just give a summary.
Absolutely. Not to kind of pull everybody's time in, but there has been an industry consolidation wherein the world number one leader was bought out by another player in the food and nutrition market. In fact, the world number one leader was bought out twice. Changed hand twice, and that is one part. So there was a reasonable level of consolidation happening. In India also, one of the players was bought out by another European player. So there was ownership changing hands. The second part is, and which is the most relevant, is that there has been a reasonable level of innovation over the last 10 years or so, wherein the product mix has changed. So the number of people who are using the cheaper grade of MCC has reduced, and the formulators who are putting in the more sophisticated, more relevant, innovative MCC has gone up, so that their formulation is able to take in every kind of API and probably tablet it better. The stability remains better. So basically, the innovation has ramped up, and the product mix of the MCC, a typical MCC player, has changed, wherein the average realizations have improved.
That's very concise, sir. And just very final question, in CCS, end pharma formulation, right? Can you give me name of maybe 3-4 large volume product? I understand it goes in DC grade, but can you name top 3 or 4 large pharmaceutical formulations where CCS is used?
I think that will be a very difficult question to answer, Rupesh, because we will have to have an understanding of what volumes of which large tablets sell in the market, which we're not really aware and adept on. What I could always tell you is that you and me, all of us end up taking Dispirin, and the moment it is put, it behaves like an effervescent tablet wherein it disintegrates and goes up. So that particular property is what is imparted by CCS. So it becomes integral to any formulation.
Okay. Thank you. Thank you for being so generous with your time and answers. So thank you so much. Yeah.
Thank you, Rupesh.
Thank you. The next question is from the line of Amit Vora from Ginar Consultancy. Please proceed.
Thank you for taking my follow-up. One question is on the realization. So you mentioned that the realizations are around 241. what are the current realizations like in this quarter as we are already entering this halfway through?
Almost more or less same thing, but gradually in end of the quarter, small increase would be there. Quarter on quarter improvement would be there. This end and beginning, there would not be much variation, sir. That is the reason.
All right. And sir, any stress on the working capital, sir, that we are seeing, or how is it? So what would be the receivables that are there on books as of June, and the working capital debt, if that number you can help us with?
Yeah, receivables slowly it is improving, and it is coming down. Our aim is to bring it to around 90 days, and then later on we'll bring it to 80 days, 75 days. It is like that. But it is
what are the receivables, sir? Right, what is the number, sir, on receivables?
Right now it is around 90 plus. Is there 93, 94 days?
Okay, sir. I think I am done with my question. Thank you so much.
Thank you.
Thank you. As there are no further questions from the participants, I now hand the conference over to the management for closing comments. Over to you, sir.
Thank you. As we conclude, Q1FY27 reflects a steady execution against our stated priorities. The H2 progressing well, our API R&D capabilities now being fully operational, and a growing differentiated product portfolio with the launches like Hicel SNCC Nutra. Our strategic direction remains unchanged, expanding capacity, deepening our product mix, and delivering consistent profitable growth through disciplined execution. We look forward to updating you on our progress next quarter. Thank you all.
Thank you. On behalf of Go India Advisors LLP, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you, everyone.